Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Notable data in both Australia and New Zealand yesterday has reset our currencies and our benchmark interest rates. In New Zealand, of course, it was the market reaction to the RBNZ OCR cut. In Australia, there was the unexpected rise in their CPI inflation. Both had a cumulative impact in both countries. But first, American mortgage applications last week were little changed, but refinance activity softened noticeably, while new purchase activity was firm, despite mortgage interest rates creeping up. And actual US initial jobless claims rose to 244,000 last week from the prior week's 218,000, but that puts them almost identical to year-ago levels. Continuing claims are now almost 1.8 million, 4.3% higher than year-ago levels. And catch-up data for US durable goods orders for September was mildly positive from August, but were a good 9.6% higher than year-ago levels. Excluding aircraft and defence orders, though, capital goods orders were little changed from a year ago. More current, the Chicago PMI came in much more negative in November than the weak October level, with weakness building in new order levels, production and employment. It is now down and approaching 10-year lows. And we get the Fed's Beige book later this morning, and it too is expected to report weaker conditions. Of special interest will be what they found in these surveys on inflation pressures. Across the Pacific, Singapore reported strong rises in industrial production, rising 29% from a year ago, and that was their largest gain in over 10 years. In Hong Kong, we should note a tragedy. A massive fire has engulfed multiple high-rise residential blocks in Hong Kong's northern Tai Po district overnight, killing at least 36 people with hundreds still missing. They're struggling to bring the blaze under control. In Australia, CPI inflation accelerated to 3.8% in October, up from 3.6% in September, and above expectations of a 3.6% increase. It was well above the RBA's 2 to 3% target range. This is the highest inflation reading since the monthly data series began in April. They're likely to get rate hikes in 2026 now. And staying in Australia, total construction work fell 0.7% in the third quarter of 2025 from the prior quarter, missing expectations for a 0.4% rise. But it held its year-on-year 2.9% growth. The quarterly downturn was driven primarily by a sharp drop in engineering work based around infrastructure projects. And here in New Zealand, yesterday's monetary policy statement brought a more hawkish tone than financial markets were expecting, and that caused a rethink on how interest rate pricing was set, resulting in a rise across the board in swap rates. And the US Treasury 10-year yield is now just on 4%, up 1 basis point from this time yesterday. And the price of gold will start today at $4,166 an ounce, up $29 from yesterday. And American oil prices are up 50 cents at just on $58 a barrel, while the international Brent price is now just on $62.50 a barrel. And the Kiwi dollar is now up a sharpish 80 basis points from yesterday, now just over 56.9 US cents. Against the Aussie, we're up 40 basis points at just under 87.4 Australian cents. Against the euro, we've risen 60 basis points at 49.1 euro cents. That all means our trade-weighted index starts today at just under 61.6 and up a significant 80 basis points. And the Bitcoin price starts today at $87,560 and up 0.6% from yesterday. Volatility over the past 24 hours has been modest, just on plus or minus 1%. And in the US, S&P Ratings has downgraded its stability rating of stablecoin Tether to weak, concerned it is under-collateralized. That is, it no longer has the backing to maintain a US dollar peg. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.